Hello guys. So this is a video on the introduction to smart money concepts. Okay. Introduction to smart money. Okay. So when we say smart money, what do we mean by smart money? Okay. So we see in trading, right? We have the institutional traders, okay, or institutional trading. We have the retail trading. Institutional. Institutional trading and retail trading. All right. So we talk about institutional trading. Institutional trading are the banks. Okay. So sorry guys. So when we talk about trading, we have the banks. All right. So when we say the banks, we are talking about the big institutions that they trade with large volumes, okay, large sums of money, okay, billions and trillions of dollars into the trading. So they actually move the market, right? And when we say retail, okay, retail are as the normal traders, you see, we are called the retail traders because what we do is that we trade based off what we see on the charts, right? We trade with little money. It doesn't matter if we trade with 1 million US dollars or what. It's very little to actually move the market. So it's the banks, okay? When you've seen this video before, there are some videos that maybe you could find on Instagram, right? That banks trading, okay? And what they do is that when you look at the screen, you could see sums, like huge sums of lots. So the banks could be trading like 1 billion lot size, okay, on their position. That is what actually moves the market, not our little money that we use, the $10,000, the 100,000 US dollars, the 1 million US dollars. When I say little, it's not small, but then what I mean is that it doesn't really move the market. So the whole idea of smart money, okay, the whole idea of smart money is that when these big institution trades, okay, when these big institutions, when they move the market, okay, when these big institutions move the market, when they move the market, okay, in a direction, what they do is that they leave a blueprint, okay, okay, when the big institutions move the market, they leave what? They leave blueprints. So that blueprint is what we, the retail traders, okay, or we, the smart money traders, would actually study and then trade. So basically, when we are trading like the smart money, okay, the big institutions are what we call the smart money. So when we are trading like the smart money, we are um we are trading based of what they are doing. Okay, so we are following their footprints. So the marks that the print that they leave on the chart is what we study and then trade like them. That is what we call the institutional trading. That's what we call smart money. Okay. So when it's smart money, there are so many concepts governing this smart money concept and all of that. When you delve into smart money, there are so many concepts, and we are going to talk about them. Okay. So that's the whole idea. When we talk about retail trading, okay, as retail trading with retail ideas, okay, retail trading with retail ideas. retail trading, sorry, retail trading. What we do is that we trade with retail ideas. And when I say retail ideas, that is what we call the trend lines, you know, the trend lines, the chart patterns, those are the retail ideas. And when we are trading these retail ideas, you trade with no context. Okay. There's no context to it. You are just trading based off what you are seeing on the chart. So one will call it price action. Bro, it's price action, of course. But then everything that's happening on the chart is actually price actions. It's literally the action of the price. But retail traders trade with no context. They just look at the trend and see that it is an uptrend. They just move with the market. It's an uptrend, it's an uptrend. Of course, it's an uptrend, it's a contest, right? But what they don't know is that where is the market going? Why is the market doing this? Okay, that is the contest. Why is the market moving in the way that it is moving? Where is the market moving towards? That is the contest. Okay, that is the contest that we are talking about when we say that um we are trading like the smart money, because with smart money, with the blueprints, okay, that they leave, okay, with the blueprint that they leave, when we are able to follow them, you know exactly where the market is going. Not necessarily all the time that you get it right, or sometimes you manipulate it, right? But most of the times you have the idea or the context of where the market will move towards next. Okay. So that is what we mean by smart money. So in smart money, we have some terms like manipulation. Okay, we have some terms like manipulation. When we say manipulation, manipulation is whereby um you would think a trade is going in a certain direction. Okay, you would think the market is moving in a certain direction. It would go to that direction. So you'd be convinced that, of course, it is actually going to where you actually predicted. And then you would be stopped out. You would be stopped out. The market will move rather in the other direction or the opposite direction. Okay. So normally the manipulations happens at obvious places. Places that are way too obvious that at this place, someone is going to actually buy or sell. Okay. That is where the manipulation happens. So I'll give you an example, okay, on the chart. I'll give you an example. Uh let's see. So let's use this for an example, right? Let's use this support level for an example. As you can see from this level, right? Like that. It's what we call support. Okay, so it's supporting price. So price first came there, right? Price came back to this level and moved price upwards. So the whole idea about this is that when price comes to that level again, what will it do? It will move price higher. Okay, it will move price higher. And then there's another idea that when price comes to this level, what will it do? It will break through this level and then it will continue lower. Okay, so the first idea is that when price comes to this level, it will move higher, of course. And then the second idea is that when price gets to that same level, okay, when price gets to that same level, it's going to do what? Break through, retest, and then move. That is basically what we think when prices get into such levels like this, okay? Support levels like or resistance levels. But that's not what normally happens. At levels like this that we all know that when price touches this level, we expect it to move upward because it first came there and then it moves upwards. or when it breaks through, we expect it to continue lower. The smart money or the big institution sees this level too, like us. So we should know that they are actually smarter than us because they are actually moving the markets with their huge sums of volumes, right? So they are actually moving the market. So they see these lines, right? So they laugh at us. They be like, what are these people thinking? They think that the price reaches here, they can actually buy. Well, fine. Sometimes it would work. Of course, we have to let you make money to can't be poor for, you know, your whole life trading. So you have to actually make money. But the whole point is that they have something called manipulation, right? Smart money trap. Okay. SMT, smart money trap and manipulation. Whereby, since we all know, right? We all know that because price came to here first and tested it and then moved upwards. When price comes back there and it doesn't break through, it will move upwards. What do we do? Well, what we do is that we actually allow price to do what? Come to that level, but instead of actually going below that level or breaking that level, to go slightly below that level, right? And it will move upwards. So do you know what happens here? What happens here is that we get all two traders, okay, the two type of traders that would want to join this trade, okay, we get them. So the first one is that you have someone who wants to buy. So they've already put in their buy limit here. So when price gets to this level, it will trigger what? Their buy level, right? It will trigger their buy limits. But what they don't know is that since they will put their stop loss slightly below that level, okay? So let's say they put it right here. This is where they enter the market, right? And since they put their stop loss slightly below and avoid this price action, think as if the market hasn't already come here, okay? So before the price comes in, this is what they will do. This is what everyone will do. Put your stop loss slightly below this level. And as you can see, the market came into that level, triggered the buy limit. But what did it do? It went below that level, and then what? Hit the stop loss. So when it hit the stop loss, then it moved in the direction that was predicted earlier. So of course you got it right. You got it right that the price moved in your direction. But what you got wrong is that you were manipulated. So you could say that they were targeting your stop loss. Well, of course they were targeting your stop loss, your little stop loss. No, there's liquidity below here. And then we'll talk about it too. So this is what we call manipulation. You are being manipulated into thinking that when price reaches this level, it is going to go up. Of course, it did. But what it did is that it went below that level, slightly below that level, to make sure that you are out of the market when the move happens. This is the first manipulation for the buyers. And then we have the sellers too. We have people that would want to sell when the price breaks below this level. Of course, there are people that would want to sell. So when you go into a lower time frame, like the 15 minutes time frame, right? Lower time frame, like the 15 minutes time frame. This thing. Oh, I'm going to put it. Oh, sorry. Sorry, guys. So good. So on the 15 minutes time frame, right? Let's look at something right here. Same level. It's the same level, right? It's the same level. So as you can see, price first tapped into it, moved upwards. So the first instance is that when price taps into it again, we expect it to move higher again. Okay, targeting here. But then what if price comes and then goes below that level? Okay, that too is what the sellers are thinking. The people that would want to join when the price goes below this level. So what they will do is that they will also put their sell stop. Okay, when you say sell stop is a limit that you put that when price is going in the direction that you prefer, okay, in a lower position, price will trigger it and continue. So they will put their sell stop where here, and then they will be targeting maybe somewhere here. Okay. So the moment that price taps into that level, okay, they are expecting a break. They're expecting this level to be broken. So the moment price goes below this level, it is it has been broken. So it's a break. And where is their stop loss? Above this area. Okay. So now we've already trapped the buyers into thinking that price would go upwards when it taps into this level. So they put their stop loss somewhere here, and then price tap into the stop loss, move them out, and then run into their direction. Now, how do we trap the sellers? Okay. So this is how they trap the sellers too. People that are putting their sell stop here. Okay. They have sell stops, they have sell orders that when price goes below this level, immediately price goes below this level, they should sell. Their stop loss is slightly above this level. What does price do? Comes triggers, it triggers what? Their order, making them think now the price is going below. And then what does it do? Moves right through their stop loss and then moves in the opposite direction. So this is what we call manipulation. The chart has been manipulated by the institutions. So every retail trader will be fact. Okay, is what we call manipulation. So as I've already explained, you have the institutional trading, and you have what? The retail trading. Okay, institutional trading and then retail trading. So that's basically the whole idea of smart money. Okay, that's the whole idea of smart money. So this is just a little video on the introduction of smart money. And so what we are going to do as smart money concept traders, okay, traders of the smart money concept is that we are not going to fall for these manipulations. Okay, or even if you are going to fall for it, most of the times you'll be in the right direction. Okay, so we're not going to fall for this manipulation, but rather we are going to follow and do exactly or some of what the institutional trading do, the big or the smart money does. And that is what we call the smart money concept. This is the first episode, the first introduction to smart money. And I hope that this gives you an idea about what smart money is, the concept, the manipulation, and all of that. In our next episode, we'll talk about the market structure, the liquidity, and then everything that has got to do with the smart money concept. Thank you very much. And I hope you enjoyed this video too.